Okay, so in our previous class, we have discussed about the non-current liabilities and current liabilities, yes, and some part of non-current assets also.
Yes, sir.
So,
So, before continuing this, I have a doubt from the test.
yes.
I have a doubt from the test.
Okay.
So, could you solve and show that question?
Wait 1 minute. Okay, so here it is. Text. Tell me.
So, the sixth question.
In question number 6, okay. Tell me, what is your doubt?
Sir, I don't know how I should find a net profit before or after tax from the balance sheet.
Okay. So here you can see, or in reserve and surplus, there is opening balance of the statement of profit and loss. Yes.
Yes, sir.
And this is your add transfer from statement of profit and loss. So this is your current year profit.
Okay, sir.
Because the profit or net profit, which we calculate in a statement of profit and loss, is transferred to balance sheet. Yes.
Yes, sir.
Yes. So if there is no appropriation of profit that is transferred to general reserve or any other reserve, so in that case, we transfer all of the profit to our reserve and surplus. So that's why the transfer from statement of profit and loss is our current year profit. Okay.
Okay, sir.
And this profit is after tax. Means if there is any information about tax, then we have to add tax first, then we have to add interest on long-term debt in this. Okay.
Okay, sir.
Okay. So this will be our profit before interest and tax. And you know how to calculate capital employed?
Yes, sir.
Yes. So you have not done this portion in test?
Sir, I tried it, but it's wrong.
Okay. Okay, so do you have any other problem in any previous question or any topic?
So I have a doubt from a question in textbook.
Okay,
So I'll say the question.
yes.
Net
Or
profit.
you can tell me the question number so that I can find in my book.
So it is under return on investment. It is question number 165.
Return on capital employed or investment.
Yes, sir.
Okay. Now, can you read the first line?
Net profit before interest and tax 4 lakhs. 15% long-term debt 8 lakhs. Shareholders
Yes.
fund
4 lakhs.
Calculate
Okay.
return on investment.
So net profit is already given.
Yes, sir.
Okay, fixed asset is 20 lakh, and there is net working capital of 10 lakh. Working capital means current assets minus current liabilities. Yes.
Not that question, sir. The
Okay.
next question.
Okay, sorry. So net profit before interest and taxes 4 lakh, 15% long-term debt is 8 lakh, shareholders fund is 4 lakh. This is very simple question. Why you have problem in this?
Sir, I tried it, but I'm not getting the same answer as the one given in the textbook.
Okay, you are not getting the answer. So what is the answer then?
The one I got?
Yes.
1 minute, sir. Sir, I got 76.9%.
76.
Yes, sir.
Okay. So net profit before interest and tax divided by capital employed into 100. This is the formula.
Yes, sir.
Okay. Now there is two approach to calculate capital employed. That is investment. First is asset side approach. The second is liability side approach. We don't have information about asset side approach, so we have to use liability side approach. By liability side approach, we have to add these two information given, that is shareholders fund and non-current liability.
Yes, sir.
So you will get 12 lakh.
Sir, I found my mistake. Instead of adding the 8 lakh, I took interest and I added the interest with it.
Okay. So this is your capital employed, and then 4 lakh divided by 12 lakh, you will get 33.33%.
Okay, sir.
Okay. Any other doubt?
No, sir.
So should we continue our today's topic?
Yes, sir.
Okay. So today we are going to understand the assets part of the balance sheet. Current liability was actually, I told you that I will show you this, what will be included in these. Yes.
Yes, sir.
So these are actually, you should remember these, so that if there is any question related to any of the item given here, you will understand that in which heading or subheading they will go. So non-current liabilities, current liabilities, and you are taking screenshot.
Yes, sir.
Okay.
Yes, sir.
Oh. So now non-current assets. The first item in our asset side. So non-current assets. I told you that classification of assets or liabilities in current or non-current is based on the 12 months time or the operating cycle. Yes, do you remember?
Yes, sir.
Yes, so that's why it is written here. You can see the definition of non-current assets. Non-current assets are those assets which are not current assets. Means assets that are categorized under current assets. Except those assets, all other assets are non-current assets. So there is no definition of non-current assets in the Companies Act in Schedule 3. We have definition of current assets given. Okay, so if you understand the current assets, then you will understand non-current assets also. So other than all the current assets, all assets are non-current. So definition of current assets is current assets are those assets which are cash and cash equivalent. So first of all, we have to include cash and cash equivalent. After that, expected to realize within 12 months or within normal operating cycle. Okay, means we will realize those assets, we will sell those assets within 12 months or within operating cycle. Okay.
Yes, sir.
Okay. And the third is held for sale or consumption. This is also within 12 months or within normal operating cycle. Means we are keeping this item for selling purpose or for consumption in business within 12 months, means within short period of time. Okay. So these are our current assets. Now, if you see the classification of current assets, you can see here. Yes, these are your current assets. First is current investment. Second is inventories, trade receivable, cash and cash equivalents, short-term loan and advances, and other current assets. Okay. So current investment means 1 minute. Okay. So current investment. Current investment means the investment which we will sell in within 12 months. Okay. The second is inventory. Inventory is kept for sale purpose, and we don't keep inventory for long-term purpose, because if you have a business and there is some product you want to sell it, so you want to sell it as soon as possible. Yes, not after 12 months.
Yes, sir.
Okay. The third is trade receivable. In trade receivable, there is two items included. The first one is debtors, and the second one is bills receivable. Okay. So debtors and bills receivable, these two are our credit sale, related to our credit sale. When we sell our goods, it can be on cash basis or it can be on credit basis. So if it is on cash basis, then there is no problem. And if it is on credit basis, then we have to receive money from those persons, those debtors. Okay. So sometimes they give us some bills, that is called bills receivable. It is after 60 days, 90 days, or 120 days, it is receivable after that period of time. So bills receivable is current assets due to its time factor of 90 days or 120 days. Maximum time period is, I think, 180 days. There is exception of bills receivable may be that it will be paid after 1 year. Okay, so generally all the bills receivable will be realized within 6 months. That's why it is current assets. Now, debtors. Actually, there is no time period to realize debtors. But what is our intention? Okay, for classification of assets and liabilities, our intention is very important. Okay, sometime there is no time factor to realize money from assets or time factor to pay liabilities, but there is some intention of business person that in how much time you want to realize money from those assets. So if you sold goods to someone, okay, to debtors on credit purpose, in how much time you want to realize that money?
Second repeat.
Okay. So if you have sold some goods, you have a business and you have sold some goods on credit, okay, credit basis, and you want to realize that money from debtors. Now, how much time you will give to the debtors to pay the money?
So within
In
the accounting period.
Yes, within the accounting period. Actually, our intention is as soon as possible. If they will give us the money earlier, then there is no problem. Yes.
Yes, sir.
Yes, because our cash is, you can say, kept busy in credit sales. So in as soon as possible, we realize the cash from debtors, it will be good for the business. So that's why credit receivable, bills receivable, and debtors are current assets. Cash and cash equivalent, there is a definition that includes cash and cash equivalent. Short-term loan and advances. So in short-term loan and advances, we give some loan to our related persons or our employee. So we give these advances to someone, but for short-term purpose, that we will receive these money within 12 months. Now tell me, if you have taken a room or a property on rent, okay, and you have given some advance on that property. Now tell me that it is short-term or long-term. Should I repeat the question?
No, sir.
Okay.
So short term.
Short-term. Okay, actually, it is long-term because generally you take, if you take property on rent, it is for long-term purpose. And for a longer period of time, you want to keep that property in your business because we generally don't change our address soon. Okay, so for how much time we take property on rent, this advance will be with the landlord. Yes.
Yes, sir.
So that's why it is long-term loan and advances.
Okay, sir.
Okay, the last one is other current assets. In this other current assets, there are some assets like prepaid expenses or accrued income. So these income or prepaid expenses we include in other current assets. Or you can say, if any item is not included in any of the 5 categories, then it will be under other current assets. Okay.
Okay, sir.
Okay. Now, if we see the classification of current assets, you can see here. First is current investment, investment in equity share, investment in bond and debentures, mutual funds. So any type of investment which will be realized within short term is current investment. Okay, current investment is generally trade investment. There is some exception that current investment is non-trade, but generally current investment is trade investment. I told you there is 2 types of investment, trade investment or non-trade investment. Do you remember this?
Yes, sir.
Yes, trade investment is related to our business. It is to help our business to grow. Okay, but non-trade investment is just for value addition. So there is no benefit to the business from that investment. Okay, so that is called non-current investment. Now the next one is inventory. You asked me one question related to this.
Yes, sir.
Yes, loose tools and stores and spares, I think.
Yes, sir.
Yes. So you can see inventories includes raw material, work in progress, finished goods, stock in trade, stores and spares, loose tools. Now you understand raw material, work in progress, and finished goods.
Yes, sir.
Okay. So raw material is item that we use for producing our finished goods. Work in progress means the item is not completed yet. We have to finish it, then we will sell it. And the last one is finished goods, means item is completed and it is ready for sale or consumption. So that's it, finished goods. The stock in trade means the item we purchase from someone and sell it as it is. We don't change the product. Okay.
Okay, sir.
Like in any trading business, wholesaler or retailer, not manufacturer, we purchase some product and sell it as it is. Like any, you can say the hair oil and the beauty product, the fairness cream, like this, they are purchased and sale as it is. There is no change we made in those goods. Yes.
Yes, sir.
So these are called stock in trade. The next one is stores and spares. There are some small items that is used for our consumption in normal course of business, like screw and grease. These type of items are included in stores and spares and loose goods.
Okay, sir.
Okay. And cash and cash equivalent, you can see cash, check, and draft in hand, balance with that. So these are your current assets. Now we will understand the non-current assets. Actually, the definition of current assets is given. That's why we have understood the current assets first. Now, non-current assets. And there is 5 items you can see in non-current: property, plant and equipment, and intangible assets. Now, we have discussed this, but there is some explanation. Now, in property, plant and equipment, what we include? All the items that is required for the business, that is helpful in our business. Property, in which our business is located. Plant, the machine that we use for production. Equipment means small items or small machinery that is used for production. So these are our business related items. Now the next one is intangible assets. In property, plant and equipment, there is next item, intangible assets. So second item is intangible assets. Now, intangible assets means asset which helps our business but cannot be touched or seen. There are several items like goodwill, patent, copyright, know-how, trademark. So these are our intangible assets. There are some value of these items because sometime a company sell its trademark only, okay, and they receive a huge amount. Yes.
Yes, sir.
Like in franchise business, they just give their trademark to some business and they give them some franchise fee, the heavy franchise fee actually. Okay, so this is your trademark. Copyright, you know, the books published by the writer or the publisher. The know-how, that is how to make some goods, it is called know-how. Patent, it is the chemical formula for making drugs. Okay, and goodwill, the name of your business. So these are your intangible assets. Now after that, deferred tax assets. Do you remember what is deferred tax assets? I told you about this.
Yes, sir. I'll try to remember.
Okay, no problem if you don't remember. Just read after the class the concept. deferred tax assets is actually deferred tax assets and liability is created in same manner. So generally we discuss both of these concepts together. So deferred tax assets or liabilities are created due to change in provisions of Income Tax Act and Companies Act. Okay, some of the time income tax charge less tax than Companies Act. Okay, in some of the provision, expenses is charged higher in Income Tax Act, and in Companies Act it is lower. So if we charge income tax higher in Income Tax Act and in Companies Act it is lower, then our tax liability will be low. Tax liability will be low and we will pay low tax. But in future, it will result in higher tax. Okay.
Yes, sir.
Okay. In the same manner, if there is some provision due to which we are paying higher tax now, so in future we will pay lower tax. Okay.
Yes, sir.
So in both of these situations, if we have to pay lower tax in future, it is called our deferred tax assets. And if we have to pay higher tax in future, then it is called deferred tax liabilities. Means in future we have to pay more, or in future we have to pay less. Deferred means time after some time.
Okay, sir.
Okay. So the next is long-term loan and advances. I told you sometime we give loan or advances to our employee, advance to the landlord for their property, and sometimes we give advance to our supplier. Okay, it can be long-term or it can be short-term. So whatever the time is, if it is more than 12 months, the advance is for, then it is categorized in long-term loan and advances. And if it is for the short term, then it is short-term.
Okay, sir.
Okay, so advance to employees, advance to landlord, advance to supplier. Okay, and the last one is other non-current assets. Actually, it is non-current assets. So this is our balance sheet part. Okay.
Okay, sir.
Okay. Now, can you tell me that when we have discussed the previous class homework, actually, the last class was cancelled. You were not at your home.
Yes, sir.
So in our previous class, I have given you some homework that is complete now, or is there some portion left?
So actually, I didn't do that.
You didn't do any of the portion?
Yes, sir. I forgot about it because the test was there, so I was preparing for
Okay.
it. I forgot to do it.
Okay, so should we solve some of the question then?
Okay, sir.
Okay, so we are discussing some new questions here. Okay, you can see the question here.
Yes, sir.
It is visible.
Yes, sir.
Okay. So the first question is actually prepare balance sheet. The totaling of balance sheet is not required. It is given here. Totaling of balance sheet is not required. And we have given 10% debenture, stock in trade, goodwill, provision for tax. It is the items, only some of the items are given. So we don't have to prepare all the format, whole of the format. Okay. We will only write the heading or subheading for which items are given. Okay.
Okay, sir.
So in this, only 4 of the items is given. So it will 10% debenture will go to non-current liability. Yes.
Yes, sir.
And stock in trade will go to current assets under inventory. Goodwill will go to intangible assets under property, plant and equipment or non-current assets. Okay. And provision for tax is current liabilities, other current, short-term provision. Okay.
Okay, sir.
So you can prepare this question. This is very small question. So I will prepare the next question. You can see here. The question number 32.
Yes, sir.
Okay. So general reserve is given, 8% debenture is given, fixed assets, tangible assets, other current liabilities, surplus, that is balance in statement of profit and loss, credit, depreciation of fixed assets, other current liabilities, share capital, other current assets. So we have to prepare balance sheet. Okay, so balance sheet. Balance sheet of as on. First of all, particular note number and then amount. It is VT Limited and 31st March 2020. So balance sheet of VT Limited as on 31st March 2020. The first item is equity and liabilities. And under equity and liabilities, the first item is shareholders fund. In shareholder fund, there is share capital. We will leave one line if there is any reserve and surplus. Then the second is actually debenture is given, so we have to write non-current liabilities. And under non-current liabilities, debenture comes under which heading? Ritika,
Yes, sir.
under which heading we have to write debentures?
So long-term borrowing.
Yes, long-term borrow. Very good. So you have to remember these things so that you can easily prepare the format. long-term borrowing. After that, we have written share capital, we have written reserve and surplus we have to write. Actually, reserve and surplus is also given. So reserve and surplus. After that, depreciation and other current liabilities given. So current as liabilities also. And under current liabilities, only other current liabilities is given. So we don't have to write anything else. After that, asset side. The first item is non-current assets. And under non-current assets, it is property, plant and equipment. And intangible assets. Now, do we have intangible assets? No, I think no. So property, plant and equipment there. And the last one is current assets. And under current assets, it is other current assets. Other current assets. Okay, then we will write the amount. Share capital is 5,000. So 5,000 here. We generally give note number 1, but there is no notes to account, so we will write this. Reserve and surplus. Under reserve and surplus, there is one item and there is two items. So 3,000 and 1,200, it is 4,200. Okay.
Okay, sir.
Now, debenture is 3,000. So long-term borrowing, and then other current liabilities 2,500. Now asset side. All the items are complete. Okay. Property, plant and equipment. Fixed assets, tangible assets at cost is given and there is depreciation. So what we have to do, we will write the net amount 9,000 minus 700. Okay, 8,300. Okay.
Yes, sir.
You understand this? How we got 8,300?
Yes, sir.
Okay. And there is 6,400 other current assets. So 6,400. Now we will total. It is 14,700 on the asset side and it is 14,700 on the liability side. Now tell me, is there any doubt here?
No, sir.
So everything is clear?
Yes, sir.
Okay. Now, actually the question number 33, you can see it is same. Long-term borrowing, trade payables, share capital, reserve and surplus. Items are little different, but these are same. Yes?
Yes, sir.
Okay. And Let me check the previous class. Homework. Yes. Okay. So these are your previous class homework. The question number 24, provision for employee benefit falls in advance. Okay. So provision for employee benefit is long-term provision. We will write in long-term provision. Falls in advances our other current liabilities. Okay.
Okay, sir.
Prepaid expenses, loose tools, loan repayable on demand, provisions for employee benefit. You have to write these items under the headings. So you understand how where these items will go.
Yes, sir.
So everything is actually question number 28. You can see.
Yes, sir.
Okay. And question number 27. First of all, 27. Read the item name and tell me where these items will be shown under balance sheet.
So the first one will be shown under reserves and surplus.
Very good.
So
Actually,
this,
we will show it under reserve and surplus, but it will be deducted from other reserves because it is debit balance.
okay, sir.
Next,
So the second one will be shown under other current liabilities.
interest accrued and due on debentures. Yes, other current liabilities. Very good.
So the third one will be uh, is it under property, plant, and equipment under uh,
Under property, plant, and equipment.
equipment? Yes, sir.
Yes, it is intangible under development.
Yes, sir.
Okay. The next one.
The other current assets.
Yes, other current assets, interest accrued on investment. So we have to receive this interest, and it is short term in nature. So yes. Then question number 28. Please read the question.
Yes, sir. So should I say under which head it is?
Under?
So should I say under which head it is or
Yes, yes.
okay. So the first one under long-term borrowing.
Okay. And the second one?
That is also on the long-term loan.
Okay. And there is one more line written. Interest on debenture and bank loan has not yet been paid.
Yes, sir.
So
I don't know, sir.
interest on debenture and bank loan has not yet been paid means we have to pay these liabilities. So this is our current liabilities. Generally, interest on debenture and bank loan pay monthly or half yearly or yearly. Yes.
Yes, sir.
So if it is not yet been paid, then it is our current liabilities because interest is not paid for current year only, not the previous year. Yes.
Yes, sir.
Okay. Now there is one answer correct. One answer is correct. Like 11% bank loan from SBI repayable after 5 years. This is correct. 20 lakh. It will be shown under non-current liabilities, long-term borrowing. Okay.
Okay, sir.
But the second one is incorrect. Now, can you tell me why it is incorrect? Or should I tell you?
So you can.
Okay. So you can see here 10,000, 10% debenture of rupees 100 each, redeemable in 4 equal yearly installment beginning from 1st July 2020. So you can tell me the first installment is payable on 1st July 2020. Yes.
Yes, sir.
Okay. And we are closing our books on 31st March 2020.
Yes, sir.
Okay. So after 31st March 2020, how much time period we have to pay this first installment?
Three months.
3 months. That is April, May, and June. Yes.
Yes, sir.
Okay. So 3 months. And how much amount we have to pay in first installment?
10,000.
10,000. How you got 10,000? Tell me.
Yes, sir. It is given here 10,000, 10% debentures.
Actually, 10,000 is number of debentures. 10,000
Okay, sir.
debentures. Amount is here 10 lakh.
Yes. So it will be 1 lakh.
It will be 1 lakh.
Yes, sir.
Now you have calculated 10%.
Yes, sir.
It is 10% is interest rate. You don't have to calculate. It is already transferred to current liabilities. Yes.
Yes, sir.
Okay. The amount will be because it is written redeemable in 4 equal yearly installments. So 10 lakh divided by 4, it will be 2,50,000. 2,50,000 each. Okay.
Okay, sir.
Let me first erase this section. Okay, so total amount payable is 10 lakh. And installment is 10 lakh divided by 4, because it is 4 equal annual yearly installment. So 10 lakh divided by 4, it is 2,50,000. Yes.
Yes, sir.
Okay. Now, if we have to pay this 2,50,000 in 4 equal yearly installments, so the first installment is 1st July 2020. The second is 1st July 2021, then 2022, and then 2023. We are closing our books on 31st March 2020. So from here to here, it is only 3 months. Yes.
Yes, sir.
From here to here, it is 15 months. So it is more than 12 months. And then these are also 27 months and 39 months. So these all three are payable after 12 months. But the first one is payable within 12 months. Now tell me how we will record this. I explained the situation. So now I think that you will be able to tell me.
So will it come under deferred tax?
No, actually deferred tax is due to different provisions under Income Tax Act and Companies Act. There is any other provision given here of Income Tax or Companies Act?
No, sir.
So it is not deferred tax. Okay. It is payable. It is very simple actually. It is payable in 3 months, that is within 12 months. So it will be recorded as short-term borrowing. Yes.
Yes, sir.
Or leave the short-term borrowing actually. It will be shown under other current liabilities. Let me show you. Yes, you can see in non-current liabilities, in current liabilities, current maturities of long-term debts means the long-term debts which is payable within 12 months will be shown under other current liabilities.
Okay, sir.
Okay, and interest accrued and due is also in other current liabilities. So their interest will be shown. Sorry, their interest will be shown in current liabilities, other current liabilities. This 11% bank loan from SBI repayable after 5 years will be shown under long-term borrowing. And from this 10 lakh, 7,50,000 will go to long-term borrowing, because there is 3 installment of 2,50,000. So 7,50,000, it will be long-term borrowing, and 2,50,000 will be other current liabilities. Is this clear?
Yes, sir.
Do you have any doubt?
No, sir.
Okay, so you don't have any doubt in today's topic or any other previous topic?
No, sir.
Okay, so then that's all for today. I will share the question. Please try to solve these question. Actually, do some question from your book also. My book is the old one, so some of the question in your book will be latest, and there are some other requirements that is added. Okay, so try to solve these portions from your book also.
Okay, sir.
Okay, then that's all for today.